What's up, guys? Get it started in a minute. Just turn down the stream beats. How's the mic? Give me a mic check. Mic check, mic check, mic check. Let's go through the tabs. Doot, doot. Get everything ready. Big picture. Good, 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 good. Good. Cool. Mic is good. Background noise is okay. All right, we'll get started in a second. Yeah, so I originally was going to do this an hour earlier, but for those of you that have been paying attention, I changed it. Instead of doing 9 a.m., 10 a.m., it's just a little bit better. I don't know. Sometimes I wake up feeling a little rusty. Today was one of those days. I'm trying to figure out, like, what is the cause of this. It's infrequent, but I'm beginning to think that I could boil it down to, there's some nights before I go to bed where I take CBD. I've only been doing this for the last couple of months, and I take these little CBD gummies. You know, not the psychoactive stuff whatsoever, no THC or anything like that. I haven't done any of that in like a decade. But and I think, like, after I take CBD, for some reason I think the day after, I feel like a little groggy. So is that a thing? Is anyone else more familiar with it than I am? I've, for the longest time, I've always had like chamomile tea before I go to bed. I don't know. It's just like a ritual. It, just part of my sleep routine. I switch between like chamomile tea, CBD gummies, or I take Thorne Research multivitamin, and they have like a PM. So if I'm like out of one, I use the others. But I feel like after I take the CBD, the morning after, I just feel kind of, I don't know, just not sharp. I guess that's the best way to put it. All right. The oil tastes so gross, though. Like the oil under your tongue. I guess just putting oil directly in your mouth it would all be kind of nasty. If you just drank olive oil. I love olive oil, but it'd probably be gross if I just poured it in my mouth. Okay, cool. All right, guys. Let's get started. It is just after 10 a.m. Eastern Standard Time. Coming to you out of New York, right after the New York cash session opened. Today is Tuesday. Tomorrow we have the long-awaited FOMC. So we got a bunch of stuff that I want to cover. If you're not subscribed to the channel, make sure that you hit the like button, hit the subscribe button. I really appreciate that. This is a fresh channel. I will still be posting content on Blockroutes as soon as our platform, or rather the project, whatever we're going to call it, releases that we've been working on. But subscribe to this channel because I'm going to be putting majority of my content on this channel. So if you're not subscribed, go ahead and hit the subscribe button. I really appreciate it. We all do this to some degree because we like the attention. Let's be honest. But what was I going to say? So we have a couple things to go over. FOMC plans. I want to hit on some current events, and then wrap it up at the end with AMA, kind of question and answer, whatever you guys are interested in, maybe charting or questions that you would like me to answer. Okay, before we get started, just as a reminder, none of what I say is financial advice, right? Strictly for entertainment purposes only. And this stream is brought to you alongside my partners, Phemex. I've been partners with Phemex now for a really long time. No one should be surprised by that. I'm not like someone who's going to be shilling the timeline constantly. They appreciate that. I appreciate that they understand that. But I partnered with them because I really trust them. They're just really good people. Honestly, after this whole Terra debacle, you had to worry about every single exchange, and to know that they did things right leading up to it, and they weren't, taking out loans and getting in any kind of bad business with, obviously some of the players that have since left us, was a really nice peace of mind. And it's because they know what they're doing. They're not like trying to be FTX where they're trying to like list a bunch of fucking weird products and kind of gimmicky things. They are just slow and steady. They offer a reliable exchange. And honestly, after yesterday, Coinbase was all over Twitter because of their fees. Phemex has the best fees across the board compared to any exchange, any liquid exchange. So I think it's like 0.06 basis points, or 6 basis points for taker, which is below, I think, the industry standard, which is around 7 basis points. And that's awesome because if you're on Coinbase, like it's a 1% for a round trip. So 1% for a round trip, unless you break a certain volume threshold. First of all, let's just talk about how Coinbase absolutely just rakes their customers over the coals with that, because that volume threshold where it's 1 basis point, where it's 1% for a round trip. I mean, it's like it's roughly 40 basis points, I guess, one way. So it's like, I don't know how it worked out. Don't quote me, but just go look at it. It's close to 1% to make a round trip, meaning to buy and then to sell out of position at market, right? And most people that are retail are going to fall into that volume threshold. And again, it's really punitive. It's really abusive. And I think we're moving towards, obviously, a state where markets are competing with lower and lower fees, right? Or exchanges are competing with lower and lower fees. And it's kind of like a race to zero, right? So we're not there yet in crypto compared to legacy, but I think we're going that route anyway. And the good thing about an exchange like Phemex, and this is going to sound really shill heavy, is what you don't have to sell your spot. The benefit of a futures exchange is, yeah, you could deposit your spot onto Phemex, but you could just short against it with futures, right? Short an equal amount of your portfolio with futures and get delta neutral, and not worry about, having to not worrying about how to sell out of your spot position, right? So you could hedge your portfolio by using futures. You could also use their spot. It's just it's a really reliable exchange. I think it should be kind of obvious that I've been, and I'm not speaking to anyone directly, but I've been partners with them now we're going on over a couple of years now. So, I'm not one of those people who's going to hop around from exchange to exchange. I'm very loyal, and I think they deserve it. So the link for the bonuses now that are currently running, I think it's like up to $5,000. It's not listed on this front page. It's up to $5,000 for a deposit, is tradefemex.com. So the link is actually below. Okay, let's get to the good stuff. Again, sound is good. I didn't even check. I didn't see if anyone said the sound is good. Did I? Yeah, big UCC. Yeah, I don't do it every night. I don't do it every night. So it's not like I always drink chamomile tea or I always take CBD. Like sometimes towards the end of the day, and this is probably because of vitamin B throughout the day or taken during the day. This is probably because of, a little bit extra coffee. Sometimes into the end of the day, I'm a little bit more wired up, and that's when I'll kind of try to smooth that out with like either a chamomile or, again, like I said, the CBD more recently. But chamomile, you feel fine in the morning. CBD, for some reason, again, like I said, it's let's see. Yeah, nice to not. I don't know if VPN's required, but in general, using any crypto platform, everyone should always be on a VPN. Raise a kill. All right, I gotta. Sorry, buddy. Put you in timeout. If you want to, give instructions, you could do your own stream. All right, sound is perfect. Awesome. Cool. Do you use any crypto tracker? Yeah, so I actually do. I forgot which one it is. Hold on one second. Let me open something up. Take it off screen so we don't dox anything. I have it set up for a majority of my wallets, but hold on. It is Crypto Portfolio Tracker. So I use Crypto Portfolio Tracker. It does the job. For tracking trading, I've gone over, the things I use. I use CoinMarketMan and I use Edgewonk. All right. Okay, cool. Quality, kefir, Ryan, no sugar, good for sleep. Good to know, Ross. I will look into that. All right, so I'm gonna look away from the chat right now and just go over some points. There's some news this morning, and I grabbed this clip from a chat that I'm in, that I think Putin is going to be making an hold on one second. Why should you be using sorry, I want to cut myself off. Why should you be using a VPN in crypto? Because not using a VPN in crypto is like exposing yourself naked in public. The benefit of crypto is self-sovereignty, control of your own assets. You want to kind of manage your digital footprint as well, and your presence, and your privacy. So I think it just kind of goes hand in hand with the ethos. And I think it's a best practice moving forward. So anyway, the rumor is that Putin is going to be making an announcement. This is a watch list from a friend of mine of major Russian stocks. And as you can see, they are, down double digits. We're talking probably the average out of this watch list looks around 35-40%. So this is possibly pretty significant. I've seen some rumors say that, Putin is going to, He's going to use the W word. I don't know if that gets you. I don't want to get myself canceled on YouTube by saying something like this. I mean, it's obviously obvious what's taking place for the last couple months between Russia and Ukraine. I just don't know how these things work anyway. I don't know how the algo works on YouTube. I don't know what you can say and you can't. So I try to avoid anything that might be controversial, especially if I'm kind of like alluding to something that is somewhat breaking, somewhat, unconfirmed. So, the idea behind stock selling off, Russian stock selling off, would be that oligarchs have some kind of wind as to what is coming. And this is something just to be mindful of, because if Putin does announce something that is, affects other countries, other nation states beyond just Ukraine, when it does come to the term war, right? When it comes to wars, markets hate uncertainty. So markets tend to perform well when a war is announced, when it's confirmed, and poor or, declining into that actual announcement or confirmation when it's all just, hearsay and rumors and speculation. So any kind of major escalation would be a very bad thing for markets, at least initially. And it's not like the kind of thing where you want to say like, oh, okay, but they rebound, they rebound after, right? Markets tend to do well after. This is a really weird time to begin with everything that's taking place geopolitically, with global macro, with, the war between Russia and Ukraine, just beyond, like, it's been kind of a clowny experience for the last couple of years, right, in markets as a whole. So I wouldn't want to lean on too much the idea that you could just like hang on for the rebound period. I would say that this could be something that could send a massive shock through markets again. So just be very mindful of that. And again, just to reiterate, be mindful of, yes, markets do hate uncertainty leading up to any kind of official announcement. They do perform poorly, but they tend to perform well after. The idea that you could kind of pre-position yourself for the after part now and be in favorable conditions when that occurs is obviously it's not certain. All right. I don't want to talk too much on this stuff because it's not my area of competence at all. But anyway, brief little touching on the news, and then we'll get to prices. I had a bad trading day yesterday. We'll go over that. I'll go over the setup that I pointed out on Twitter and how fast I took it. MicroStrategy, what do you know? They bought $6 million worth of BTC. It's like 300 Bitcoin. They're literally finding money in the couch cushions at this point. But Sailor's, I believe Sailor's cost basis is like 30,000. I think I shared it this morning. It's 30,000. And that is, that's painful, right? He's one of us. He's not, I can't relate to that, but he is underwater for the bulk of his purchases. But we know this is a different type of participant, someone that clearly has bought into the religion of Bitcoin. A couple other things, yesterday there was a big to-do with respect to Ian Bellina because of how the SEC was, I guess, what they wrote specifically, or what the statement was specifically, with most of the Ethereum nodes or most of the network being controlled by people or miners, whatever, in the United States. I forgot what the specific language was, but this basically possibly being able to set precedent for them having jurisdiction or complete oversight. It's kind of like, you have to understand that you're playing with, these people are not going to play fair. I guess that's the best way to put it. These people are not going to play fair. And Ian Bellina has done some pretty egregious shit in this market, but there's actually a lot of people that have done way more than him. But you know how it works. All right, anything else before we just get to price? Because I don't really care too much to go over the news. Most of my trading is lower time frame stuff. So, all right. So BTC. Let's take a look at, exit this. We'll first take a look at the ES. ES so far falling back below it. And I say obviously the first thing I want to look at is the ES as far as like the bigger picture. September has been a bloody month. I posted this the first week of September. Historically, September is a bloody month. This doesn't, past returns are not predictive of future results, but in this environment, it wasn't a very friendly one to begin with. So historically, September has been a very bloody month. I shared another detail with respect to midterm elections, and from November and beyond, markets have done exceptionally well. And notably in the 1970s, so when inflation was 8%, running very hot, very similar fashion, obviously different conditions. Markets rebounded again after midterm elections, I think November until 12 months after. It did something like 40% or 50%. Don't quote me. I shared it. You could just check it. But in the short term, BTC is following. So all that stuff is good to know. Like, technically we should perform well into midterms. September historically is a bad month. But obviously things can happen way differently. So my biggest focus is always, it's nice to know those little details, but you can't just lean on those, like place an order, step away. My main focus is price always, right? Where price is favoring, where price is being rejected, where it's being accepted, sort of the TPO, the sayings from people who use market profile that you'll commonly hear, where value is developing, where people want to participate the most and the least. So whatever the S&P is doing, wherever people are getting involved in the indices, whether it's the S&P, whether it's the NASDAQ, wherever there's demand there, we typically see demand show up in majors, right? We see that there's still very strong correlation. So we're back below the level that has been kind of our, what the hell is that? Untitled script. One sec. Let me expand this. Back below this weekly level, right? So it is back there. I just don't have it there anymore. Right here. That is right around 39.22 region. But more importantly, back within this composite. So this multi-week composite. This is a multi-month composite, actually. And this would have been where you would want to see support found for some kind of higher low develop. And we know that normally when we accept back within, multi-week, multi-range composite, same thing applies in the lower time frames, pretty much as it does in the high time frames. Once we start accepting back within one of these regions that was balanced, we typically see price move from one side of balance to the other, from one extreme to the other. So obviously we're looking at a daily chart, we're looking at a weekly chart. This is one of the largest data sets to look at. So this could take some time, right? This could completely reject and re-accept outside of this, but I think that we've chosen a direction now. We've had kind of this retest at the underside of the structure. This low is being lost. This was the area to defend, right? So it's more than likely, and this is why I started saying a day or two ago, you could tell, like, if you follow me long enough, you could tell I do not remember when I post things, right? And I think I'm leaning too much on Twitter, kind of keeping track of everything in my life. But I think I posted it 2 days ago, something along the lines of, I'm getting more bearish. And it's simply because I anticipate that over the coming weeks that we see prices now begin to move lower, test out the lower portion of the structure again, which was something I said, would be more than likely to happen in the long run. The idea that we would just leave this low, right, without coming back down to it and without ranging over time would be unlikely. But the important detail to understand is that, let's say we do traverse this structure, right? So, let's talk about just where we are now to the lows. 5% move down in the ES is, you're looking at least at a, the relationship has been, this be more alarming. It's been like a three, let's just say 3, right? BTC has like a beta of 3 to the S&P. So 5% down, you're looking at like a 15% move in BTC. So yeah, are we bottoming? Do I think we are bottoming? Yeah, I think we're bottoming. I think that, again, that we're looking at retests of these lows. How far we go, how much of a defense takes place, remains to be seen. But again, I think that we put in a lower tick in Q4. I posted this on Twitter a while ago, and I haven't really changed my mind with respect to that. What kind of move we have in between, what kind of range we put in, this is the extent of what we got, and now it's clear that we're going to be, I think, pressing these lows, at least in the S&P, and I can't imagine that BTC doesn't follow. Like it never happens that way. That's not the reality that we live in anymore. So there was something else I wanted to touch on, but we'll just get right into BTC. Real quick. Wait, did I? Yes, I did. Okay. No, I was just making sure that I don't think I have anything else to say about the S&P. You have structural flows at play again. You have CTA selling again. There's no longer any kind of tailwind for us. It's back in the opposite direction, right? So CTA, systematic trend followers, people that are going to be moving size and are now they basically just follow price. So that doesn't help, and we've lost market structure. I covered that completely. So BTC, just high time frame wise, I don't like multiple tests of a low, right? I mean, if you look back at the few cases where we've had bottoms, there have been some very strong moves to the low, and then yes, we reversed and continued to put in a new cycle trend. But I think in the face of what's taking place right now, it just seems like this is not the one to lean on. So I was deciding yesterday whether I wanted to actually ditch the spot that I picked up, because I talked about building spot down here. I talked about it initially at the 200, and I actually have gone ahead and done that. So I'd rather buy into strength at this point. This is just really testing my patience and I think testing the resolve of bulls by spending more time at this low than anything else, especially because the environment right now is not accommodative at all, and there's a ton of uncertainty still, and we are in a very news-driven and event-driven environment. So all it takes is kind of one headline, and possibly like the one that is, potentially brewing right now. When whatever Putin has to announce, markets are not just, they're not sitting in a really favorable place for us to like lean on just hope, right? High time frame wise, just to reiterate this, big picture, below prior all-time high. So that is the prior all-time high. The reality of the situation is there is not much that stands in the way ahead of us right now, right? So just looking at this, same, if we were looking at this on the low time frame, we were looking at a structure that had built this way on a 5-minute chart or a half-hour chart. Let's say this was intraday, and this was, a trending move that looked like, it was in progress, but now has begun to reverse. Well, you don't usually find that the market establishes support within this structure, right? This kind of gap. When you reaccept back within a gap, you usually don't get that, right? This happens to be a very significant psychological level. Being that it is prior all-time high, the market is getting involved there because the 200-day was there as well, slightly higher, obviously. But any kind of heaviness by legacy is going to take us through this structure. So just keep that in mind. And someone says, if Putin announces war, we'll pump. So as I mentioned, right, markets hate uncertainty. So when war is actually announced, that's a different story. Right, so the sooner you get over this, you get this uncertainty out of the way, and it sounds terrible because we're talking about something like it's trivial, like war is trivial. The more likely that markets might pump. Yeah, because you'd have to think there's a bunch of reasons why that is the case, but we won't go into those. So just the reality at hand is that if we don't find support at this low again, and we don't see a very swift response out, there's no reason for us to not move lower. And then we'll have to ditch the idea that this is a bottoming in process that will be local, but instead we'll kind of cover the remainder of this gap. Low time frame wise, I don't want to go over the high time frame too much. So just looking at the TPO, yesterday's long usually happens a lot faster. So I mentioned yesterday that I got chopped up. I finished the day up like $11. Here was the setup, right? Just real quick, just a roll call. Is everyone following along, or just look at the chat? Just give me 1 second. My dog is barking. I'm gonna look at the chat. All right. Okay, so everyone's following. Cool. So yesterday's setup. So these under over setups are popular. It wasn't even at the point of over yet, but the reacceptance back within prior range. So 1, 2, 3, 4, 5. I'm just counting this because I'm going to merge all these. So what we were looking at yesterday was something like this. Okay, so I said, what did I say? I said 19.5. So I was looking right around here to get involved a little bit earlier. And the idea was that price had been ranging for 5 days, right? We had multiple periods of inside value, very compressed. So if you looked at like just the average sub-period rotation size, I mean, I think at one point we were in the hundreds or even below, maybe. I have to double check that. So what I'm talking about is the average size of a 30-minute bar, which is the ATR of a 30-minute bar for these days. So things getting very compressed within a clear range. And then you have this kind of breakdown. And this is where you look for a continuation, obviously, right? You initially think, okay, so the market should not come back and accept back within this structure. So if anything, you'd look at maybe a pullback to sell in the direction of this move. You'd look for signs of weakness for continuation. Going back to something like the daily, just to show you what we're looking at. We had a target. If you were looking at some kind of bounce to form, you would look at these lows. So there was reason to assume that you might find support rather than just immediately continue. But, excuse me. Nevertheless, the breakdown occurred and the setup becomes either a failed reacceptance back within the structure or acceptance back where you look back towards the highs. The idea is, this is a clear range that was very accepting of prices, right? If the market breaks outside of this structure, again, this is like a 5-day structure. This should lead to some follow through. Bigger picture though, we had a daily level down here. So we did find support. So the setup becomes, you have potentially a setup to the underside of the structure, and then you have a setup at the underside of the structure. So I'll go over the trades that I took and the one that chopped me up. But normally when you accept back within here, so we did have brief acceptance back within the structure. Normally you see pretty quickly the price moves from, point A to point B. So same idea as any kind of range or prior day value. When the market is balanced and very accepting of prices and you get either a move up or a move down or a move up, if this doesn't lead to continuation, right? If we don't have that kind of retest and failure or just immediate move downward or upward, if instead we come back within the structure, a lot of the times you could just take for granted that this is going to move back to the other side of the range. So that's what I was looking at. Sorry, my dog barking really set me off mentally. The move never came. This took a long time, honestly. So I ended up getting in and out of position a few times and chopping myself up. Yesterday's long was before that, though. So just to go over why I longed yesterday. Which was right here. So this was the setup, right? Go back on BTC. It is right here, right? So this was the move. Let me open this up. My dog broke my train of thought. I'm like mentally trying to recover right now. This was a move, right? So yesterday had the breakdown outside of prior value, right? One leg, two legs, no continuation. Instead, the market is beginning to reclaim structure higher. So a lot of the times, right, you have a gap structure like this. If this is, which was, excuse me, at the time it was much less filled out, was basically a double distribution structure, right? Or thought of the same. Very low volume region gap. So accepting back above there, you're looking at point A to point B covering. So point A to point B. So we got the move to the underside of that structure. It looked like maybe something that could get away, but instead we found resistance initially. The pullback here made sense to initially look. It made sense rather to look for support around this region. This was at the time. This is a high volume region, point of control. This is where that original flip took place. So we had one move down, two moves down, kind of closed that gap again, and then what I noticed was, one, you had the S&P kind of finding its footing, and two, sellers were trying to rip this lower and instead got caught in this little trap, right? So we had strong move down, sideways, another strong move down, but immediate reversal. This is where I got long right here. Okay, so the market moves sideways. We have a brief spike down that does not get rewarded, and then you have this kind of under over structure. So range, right, under, over, and then this level holds as a retest. And specifically, how I always say, kind of sold then hold, range, breakdown, and then this is your selling that holds. You could see we have 8.6, 6.3. This is around 20 million contracts in volume done at the bid, and yet the market initiates outside of that. So it's just a strong retest, and this is where I got long. I ended up cutting that like 250 points later, which brings us to now. So, oh no, sorry, excuse me. My dog totally fucked me up. I apologize. I'm like completely out of my train of thought yesterday. Okay. Then we have another move back outside of that high, back to the underside of the structure. And this is where I'm chopping myself up, thinking that, one, this should have been a much faster move. So you should have, after this kind of rejection, after this kind of reclaim, this is again a prior multi-day value composite. So we're talking about 5 days to the left. So this was your rejection. If you have a major rejection like this and then you're finding support above it, this is where I was expecting this thing to take off. So I get in position. Market comes back below a level that I'm monitoring and expecting for us to kind of launch from. I pull out, I get back in, and I ended up closing this out last night, which was good because we eventually rolled. But things like this are 15-minute rotations. This kind of acceptance back within value should move very quickly. It should move very quickly. It shouldn't give you much of a retest. This was the sign that it was moving sideways for, that was 1, 2, 3, 4, 5 hours at that point. So that was a bad sign right there, right? That we didn't immediately accept in, and or rather we didn't immediately see, let's say even just this move off of that level, that the market had some kind of legs. So right now we're back within yesterday's value, but yesterday was a trend day, so it was an inefficient move. Not an inefficient move, but it was an imbalance move. I wouldn't necessarily want to get involved where we are right now. We already had that retest of yesterday's POC. We're still within value. I would rather see that we come down and test yesterday's value area low, so around 18.6. Look for a response there, or possibly see if we get a response at yesterday's lows. It's ugly though, so it's not like it's that attractive to look for the meaner version when you're retesting also what is a daily level. So again, the idea of us like looking for price to find support within these two structures, meanwhile you're still probing a multi-day level, doesn't necessarily seem like a good idea to me. I'd rather at this point, if that happens, let's say that we do get something that does kind of base out here and then we're finding balance here. I'd rather just wait for the move back above 19.5, because I think if you have at least a couple days balance below this structure and then you're reclaiming, all right, so you have more, there's more merit behind a squeeze at that point because you've had 2 days worth of participation now below this low that you've recovered. So 19.5 probably leads back up to 20,400 at a minimum. And then that's possibly, this is talking into the future because this is not looking good right now. But if we break above 20,004, then that's possibly another, under over structure that signifies a lot more strength than we're actually seeing right now. But I don't know. I'm not anticipating that that's going to happen. This doesn't look like the S&P right now is leading. The S&P looks like it's breaking down. We kind of have 3 days of balance, a big rejection at the highs. Now we're testing yesterday's and the prior day's lows. This all kind of looks like it wants to puke. ETH. Let's take a look at ETH real quick. Does anyone have any questions? Some kind of response against BTC the last couple days, but just looking at ETH BTC chart. I'll just wait for the chat to catch up. All right, so maybe there's a little bit of a lag. As far as ETH goes, ETH is it is retesting a significant technical level, right? But this is all just local. But it has been, as I said, for the last couple weeks now, it's been cleaner than Bitcoin. So the technical level I'm talking about is the June, and July composite high. It's kind of like this is at an earlier point that the S&P was at. And I wouldn't expect if the S&P, just to be clear, if the S&P continues to move down, this is coming down too. But at least this is at a good level to define risk, right? So ideally, you should have had this level act as support, right? And see a significant response form at this level to find support and possibly another move up. You've had a probe of those lows. You've had a break of these more recent lows. Again, very significant technical level. From a risk to return standpoint, this is like the most attractive region to find a long position. And this is not after this kind of sustained move, this is not a support that I'd really want to sell. Again, unless it's like in progress and Bitcoin is breaking down, the S&P is breaking down. This is so clean down here that, again, if we, same idea as we were just talking about earlier with the S&P, if we reaccept back within this structure, so consider it now just losing these lows and finding no support below like 1283, just very high probability that we move back down to 1000, right? That we test that 3-digit region again. This was a very clean range. If we don't find support at such a clean structure like that, then it should be very accommodative in allowing us to just range within there again. Locally, though, same sort of situation as BTC. We have inside days developing, so that gives us, and we have left in the day. We have 9 hours left in the day, but we have inside days developing. Right. This probably, I would say that there's a significant chance that this finishes as an inside day, unless we get a move at this point below these lows. And then your break from balance setup is that much more clear, right? So if this does finish inside and this is our high of the day, well, then that 19.5 level becomes very significant. It strengthens at least as a reason to get long above there. And then 2, let's say that we finish and this is our inside day and this is our low. A break of that low towards these lows is a good setup. I think there's a chance, right, just because of how we're forming currently, yesterday's POC, this kind of poor structure that we have in weak response so far if we break below yesterday's POC, something like 18.8, 18.7, it's a good chance that a significant amount of the risk that got involved there unwinds. Because as you can imagine, anyone who did get long from 18.2 up to that level, they're still doing fine, right? Because we haven't really tested below there. But if we do break below 18.7, I think you do have a decent intraday target with bounces along the way at 18.5 to 18.2. ETH, same thing. Again, they're just so far within yesterday's structure completely. ETH Dalton setup is a little bit more attractive. So again, 75% of the time, 77, whatever it was in crypto last time we back tested it, accepting back within yesterday's value leads to a move down to the value area low. So you probably look at initial bounce around 13. But this actually looks like a very clean setup. I mean, if you consider that we're back within yesterday's value now, and we've had a good amount of absorption at the high, good amount of soak up there, the more that we press this current daily low, the more likely that anyone long up there is going to fold, right? And then this is a very welcoming region for price to reaccept into. One sec, let's see, there we go. So acceptance for the Dalton setup is usually just 2 of these. So you got it there initially, rejected. So each successive failure, honestly, of this that is behind us, to me makes it more likely that this is honestly going to close this gap. Not gap, but trade back through yesterday's structure. If this just happened, right, and we had held that level, well, then this was the same position BTC was, where it looked like it was possibly a decent long opportunity. But instead, we're favoring, again, just accepting back within yesterday's structure. And there's so far, we don't have any kind of very significant response at these lows. I'm using a drawing tool. It's not on ExoCharts, though. This is so just to show you guys something real quick. Yesterday I was looking at, I look at Binance now and Bybit primarily. I look at other exchanges if I'm looking at like CoinLies and looking at aggregations, but this was a setup that was more obvious on Binance, but the same thing happens across other exchanges. You have different amounts of volume that are transacted. You have, it's clear that Binance does more volume than Bybit. Bybit and Phemex do basically similar amounts of volume, but this setup is basically the same across exchanges, right? So, right, retest of that prior POC is right here. Here is the trap below. This is under over move and then sold and then hold, right? And the whole way up, I drew in the last stream a flag of sold then hold, right? Where you have selling coming in and each successive candle is higher and buyers are initiating it out of there continuously. So whether you're looking at, Binance order flow or Bybit order flow, or FTX or Phemex, a lot of times there's going to be the same kind of activity that takes place through the levels, but there will be clear cases where there's idiosyncratic behavior between exchanges or different behavior. There's obviously going to be differences in terms of the volume done and the open interest that is either closed out or opened up, but most of the time you see this stuff is complementary. Just looking over things. I mean, so far, decent response at yesterday's POC. ETH is, again, the last 2 days stronger than Bitcoin. We could have seen markets move strongly this morning on rumors about Putin's speech. FOMC is tomorrow. So, all right, let's talk FOMC, and then we'll take some alt pairs. Looks like I closed out my Atom short a little bit too early. I was short Atom earlier. But all right, so FOMC. We have the most important calendar lately for crypto, and that is, you could go on Forex Factory and just go to crypto calendar. All these significant dates have been significant for crypto. So the FOMC is probably the most significant. Then we have CPI and then non-farm payroll in terms of the levels of significance this year. So I think I honestly don't have a strong opinion whether it's 75 basis points or 100 basis points. I wonder if if the Fed threw 100 basis points at the market, if then the market would start thinking, okay, then we're likely to finish off the year at 25 basis points each. You know, that's kind of like throwing 100 basis points at the market would be a surprise. It is obviously being more priced in than it was any time during this year. But I think that would be a significant shock. 75 basis points, just kind of run of the mill. It feels like it's just more of the same. I can't really see a way out of all this in the short term. Like, I don't think they're going to do anything much for inflation unless we have some kind of ridiculous recession. But it just feels like the same game over and over again. I feel like I'm not the only one who feels like that. It feels like Groundhog Day, right? Same thing over and over again. But that being said, last significant macro event was for CPI. And this was the lead in into it. So CPI, most people, myself included, thought we would see an improvement. It doesn't mean that inflation hasn't peaked, but most of us thought we would see a month-over-month improvement. And the market was long into that, right? It was clear through price action that the market was grinding up in anticipation of that. Open interest was steadily increasing, CVDs up. There wasn't a lot of fear. There was a lot of certainty around it being an improvement. Also, what that implies is there wasn't a lot of hedging. So you had a very crowded situation, and that's why we got the move we did, right? All that positioning, unwinding at basically the same time. It feels now like if you're looking at events and, you know, here's FOMC, here's CPI, and like the last one is, you know, month prior, market drift up into CPI, market has been drifting down now into the FOMC. And you can imagine, like, after this event is looked at more bearishly because this actually affects this, right? When I'm saying this, I'm talking about we're coming into the FOMC, we're coming into the Fed decision, CPI affects that. So leading into this event, we've had a market that has been drifting down. It's possible to say that if there's anyone caught off sides, more significantly, it would be bears, right? That are selling in anticipation of, an ugly move to follow FOMC. So, I mean, it's not going to happen, but if they came out and did 50 basis points, the market would rip. I don't know what's going to happen, right? And I'm just trying to make that as clear as possible. I don't have like an edge or a feeling, honestly, about how the market is going to respond. I do think, though, that if we do get, let's say it's 75 basis points and the market moves down initially, I think that the move to follow is a violent move up. If it's 100 basis points, I think you're going to get an ugly move down, right, that you get behind. If it's 75, I think the first move is going to be a fade. I think that's the best way to put it. So if it's 75 basis points, I think we get an extended move. If we get an extended move up initially, we're going to fade that. I think if we get an extended move down initially, we're going to fade that. The only thing I think is going to have legs is going to be 100 basis points, which would probably just, I think, send us much lower. But then it's like, you got to wonder, are they going to interpret, asset managers and traders interpret that as maybe that being it and that being the final kind of hammer thrown at the market. I don't know, right? But just from a positioning standpoint, I think more potentially has to unwind upward than downward, at least locally. But that being said, see, I'm thinking of this out right now. There's not a whole lot. Like, this was a different story. So let's go over this again. This is an increase in OI. This is really nothing. So this is de-risking. This is positions being closed out. Big picture wise, there is the potential for a much, like, people think that there's no more selling that could come into the market. If selling comes into the market and the market doesn't move lower, that's one thing. But the idea that there's no more sellers is always so stupid, because we're all holding, like, so many people are holding spot Bitcoin. Like, everyone can sell. And when it comes to open interest as a whole for this entire structure, like, this is the low going back to June. This is where we are now. And we are, 8% off that low. And open interest is 26% off of its low. All right, stablecoin margin contracts. So that is just Bybit FTX Binance. And that is converted to USD, and now that's more significant when it's not converted to USD. So you could almost always assume that the leverage in the market is long. It's on the shorter time frames, when there's more clear one-sidedness in price action and order flow, then maybe you could say that over the course of a larger structure, open interest is clearly hedge driven, it's clearly short driven. This goes back to, like, you'd have to go back to here to have a case of that. Much different. Complete drift overall downward. Open interest rising. CVDs doing different things, though. So this is a different story. This is quite possibly a significant amount of longs that are still in position that, again, if you just saw how much open interest is up from these lows compared to where price is from these lows, there's always leverage in the system. There's always longs that can be squeezed out. And it's almost always best to assume that the open interest that we see is because it is rather due to aggressive longs opening up. So if the market is hit with 100 basis points, then we could puke a hell of a lot more. So always be mindful of that. Like, there are some people right now that are looking at this and saying that the open interest is, hedges and shorts. I think a lot of people have either sold out of spot, or actually do think that this is a bottom developing. So it doesn't make sense to continue to short at these levels outright. You're at a region where I think more people are thinking start to buy. And even myself included, talking about us being, in the process of bottoming. But I have just gone ahead right now. Like I said, I puked my spot. I don't have any long positions open that are any kind of swings or substantial positions. I don't have anything open right now. So someone does, though. Any questions, guys? Adam was very strong and is now one of the biggest drops today. So we talked about Adam, why it was a good long a couple streams back. Key level being flipped. This is on the daily. This is a very nice retest that we had. And now we have a break from an inside day taking place. I think with Adam, and I'm not going to focus too much on this, I think with Adam, you're coming down at least to test these lows. So I think this is a good short that is still relatively close to a good area to find risk. I mean, if you look at this on the weekly, Still have room to go to the next level. We didn't close that gap completely, but if markets now are making a turn, again, to test lows, let's say the S&P and BTC, then this is in one of the most attractive areas to define a position, right? At least on the short side. And we are breaking yesterday's lows, which would usually this kind of balance broken, you're looking at the next technical level, which is around 1376. I wouldn't short at the low right now, but I'd look for some kind of pullback, and I'd zoom in on more the intraday and look for a better entry. So far, everything's bouncing. Any questions, guys? XRP. Wow. Yeah, the tweet I posted about this, about XRP the other day, was satire. Like, wouldn't it be funny if it led us to the next cycle or something to that extent? Right now, we're just retesting high time frame resistance, that daily, weekly level. But this is like another nice little W bottom that looks like it's forming. Best case with XRP is it's your highest weekly close that we're breaking through now, is that we find support above 38. So we're dealing with a daily region now right here. But if we're able to find support and retest that 38 level and hold, then I think you're looking at a much larger move up, which wouldn't surprise me in this market. It is a clown market. So hold 38, flip that. I mean, you're going to need buyers to really start lifting this thing. I could see us hitting 45, honestly. Because we're kind of just look at how the market moves. Inefficient, more efficient, inefficient, more efficient. And now we're ranging within this entire structure. So again, the idea of accepting back within a level that was a prior composite usually just means you're going to do that same behavior within there. This drawing is not meant to be taken seriously. But the lows of that structure back up to the highs. Invalidation for the Dalton setup. The Dalton setup is kind of nuanced because the original Dalton setup is, like I said, 2 TPOs. Right, so you already had that, right? So 2 TPOs worth of acceptance, or 2 columns, typically means that the market is going to cover that 70% of the time. You've had a bunch of them now. It's just the idea is that the prior value area high or value area low is the region you look for. In the case of us coming back down to it, absorption or lack thereof, right? So, yeah. If you could couple like the footprint or CVDs with this, or just volume analysis, you could usually get involved before having to wait for these 2 periods. Because usually it does move pretty quickly when you have a balanced structure that you're coming off of. This was not balanced. So the Dalton setup works better when your prior structure is more balanced. So, and then you're looking at a very brief interaction at this level. And if you're accepting back within, usually it happens pretty quickly. Looking at a Dalton setup on like imbalanced days or trend days is not the same. So as you can see, this is right now, I mean, back above that level, and it gave what looked like, the last opportunity looked like the strongest. But what do we have? We have the S&P bouncing right now. Yeah. No, so my long for BTC yesterday, I don't really ever use hard stops. I use like a tail risk stop if it's a hard stop on the chart. But my invalidation was originally 19.3. So 19.3 is right. I'll put a line on the chart real quick so I could expand this. Right here. But I ended up, like I said, I ended up closing I opened and closed multiple times within here like a dumbass. But then I ended up closing before we even got to 19.3. It was late at night. I'm thinking that I knew better. This should have happened faster. So I was making a judgment call on, do I want to put on a hard stop and then go to bed on this? Or do I want to just fold this? Because it looks like now it shouldn't be this tough to reclaim that level. Most of the time I don't have hard stops on. And I wasn't even completely in position. I wanted to scale into this a little more. I thought we might get some pullbacks at this region, so I ended up marketing in half each time and then placing limits. And that's what led me to be a little confident, because I'm placing limits and then the market is moving up and away and I'm not getting filled. I'm thinking, okay, this is probably going to get away from us soon. And then we ended up having this breakdown anyway. But no, very rarely do I put on hard stops. Oh, my longs. So for that's good. That's a better question. For this setup, for this kind of setup, when we're looking at, I was looking at Binance yesterday, and again, same thing was happening on other exchanges. So this setup is, let me just expand this. You guys can see it clearly, right? The numbers. All right. So this under over setup, I'm telling myself the story is that this is the trap, right? Consolidation, both sides of a consolidation. You have stops build up. You have directional traders waiting for this to break to get confirmation. So when you have a break, it's not rewarded. And then you have a reversal like this. It is an under over setup, right? On the low time frame. This was the evidence that I was looking for to say that this was holding and in progress. I always say that it sounds stupid. It's not like it's catchy. Sold then hold, right? So the idea is that if selling was driving the market lower the entire time, then now we're transitioning to an environment where the selling that comes in is greater than prior selling and yet is having less of an impact on price. So all prior selling was able to drive candles lower. This selling, which is greater than earlier selling within, lower, smaller rotations, is actually caught below the low at this point. So this level was flipped, it was sold, and now it's holding. So what this says is, hey, the bid is now firmer, higher than where it was even before here. So we trapped a good amount of participation. The bid is firm here. Things are probably looking to reverse in the short term. So with this kind of setup, everything, the whole trade suddenly is hinged on this level right here. So I talked about this. I talk about this in Block Roots in the course a while back. With certain order flow setups, the invalidation, as I've said, is literally the flow within an individual candle sometimes. So if I'm seeing a trap setup, or I'm seeing evidence like this setup, the whole thesis is based on this actually doing its thing, right? So this still serving as, this level now being the level that is willing to be bid. So if the market is suddenly now able to trade back below there, then my idea is wrong, right? Because things are not as firm as I thought that they were transitioning to. Same thing happens with a setup like this, where when you do have a break of these lows, if that aggressive selling is rewarded, right? So we have selling come in, maybe the market pulls up a little bit, but then buyers are getting trapped and then that selling is again rewarded, meaning price is back below their level, then it's not there, right? Because they're not trapped. They're suddenly back in the green. So for this setup to be good, I need to hold that level where that transition occurred. So yeah, if we were, if the market had pulled up and then came back below this level, then yeah, I'm probably going to ditch it because we're probably going to come back and test these lows again. Sometimes I just like to see the specific prints in here against the bid and the ask. I've met, listen, it's just a personal thing. It's not a big difference whether or not you look at it like this, or like this. Like, however you could gain the information the fastest, whatever works for you is the best thing. It's all saying the same shit. I don't know. I always like to have a little bit more of a view into exactly what volume comes in, rather than it being mixed in and then the delta just calculated, because then you could see like real one-sidedness. But it's completely up to you. If you don't use this and you use the bid ask, you use just the volume with like a delta profile, or even volume profile with delta, right? Because you could get all the same stuff, right? You could have a volume profile and then you could just use delta. You're basically you could pick up on the same thing. And you will see that I've done this before in the past. I've actually just changed it. I'll switch between just for a fresh look. Honestly, it's not like I'm missing out on much or anything. It's, things get stale sometimes. You change the colors of your charts. You change the, what you're looking for to maybe see if you could clean something up. If maybe you're missing something, if something's maybe a bit more obvious. I always end up coming back to this though. The delta ladder versus the bid-ask profile, it's just a little cleaner because it's filtered. So you can see if you click on this, my shade calculation is adaptive, volume-based, and then I have this set on certain settings. So it's only really highlighting what I think is, I don't want to highlight everything because it'll be noisy. Then it becomes something like this. Where still, again, you can see you're getting the same information, but how fast your eyes are able to, I guess, process it obviously makes a difference. So yeah, we've had a strong response at yesterday's POC, but as long as we're below this 19.5 level, there's no long for me. Unless we have some kind of very clean move above 19.3 and we're beginning to base out. And if we're doing something where we're flagging toward this level, maybe I'll anticipate it. Right? Like let's say the market moves up and then we're kind of painting this slightly higher low picture where we're funneling into the level. A lot of times when you see that, when you're funneling to a level, you get the big move through. So yeah, but there's actually not a whole lot that's very exciting right now. So if you guys have any other questions, I will gladly take them. Otherwise, we'll probably just cap the stream. I rate this stream a 6 out of 10 because my dog just completely fucked up my mojo. As I was mentioning earlier, I was saying like, this makes it less attractive for me when we test multiple times, but there's many times before we put in a bottom like this and you rip up and you think, oh my God, that wasn't textbook, right? We didn't get the case of, oh, multiple bottom test means breakdown. You could kind of see it's happened many times like this before, where you've actually had multiple stabs at a low, and then the market is much higher 2 weeks later, and you think, well, damn, this thing looked like it was going to give any moment. I mean, there's been literal bottom cases where it looked like it was going to puke through much lower. You know, that's not enough to say like, oh, this kind of happened over here. You know, each one of these looked like it was going to fail. This was a bit more of an ascending diagonal. You know, this is more of just like a horizontal. I have these diagonals drawn for a reason. This diagonal right here, that's a weekly lowest close. So any kind of weekly close below that would be significant. Any significant expansion below here probably gets the ball rolling. We don't have that yet, right? We just have a lot of messing around the level. That's why I can't prematurely sell this level or prematurely short it. I'd rather sell into a breakdown, honestly, expecting overextension and then close a little bit, you know, shortly after. Or let's say the market bases out more within here, then we might have some kind of expansion play through this diagonal, which has worked in the past, right? This is kind of like governing the rate of descent over time. And if we start breaking through that, well, then we've been moving sideways more than down at this point. So there's not a whole lot that's compelling right now. No, I don't know any German traders. Sorry. So I posted something, maybe XRP is just going to rip up. I posted something the other day about trading advice. There's a lot of cliche trading advice out there. Just to get my point across, there's a lot of stuff that you'll learn that you'll read in books that is important to know in the beginning, but you'll be breaking the rules hopefully when you're trading well. And it's, you know, not to say that you have to, but what you learn after trading for over a decade and trading successfully is that a lot of the rules that you read, you end up developing style around. You end up realizing where you can, you know, trim and make adjustments. So the wisdom that you gain is not really all that you read. It's what you learn. Things like, you know, the trend is your friend, cliches like, you know, you always have to have stops, only risk 1%. A lot of this stuff is actual. You learn that there's sometimes when it's really good to go against a trend, when it's good to be counter trend, when placing hard stops is detrimental because why should you be stopped out of a thesis because price moves one tick? You know, there are times when it's beneficial to size more aggressively into things that have a higher probability of occurring. Why would you just risk 1%? Like, there's a lot of cliches that you'll find that are kind of weak. And then the last thing I'll say is a lot of this macro stuff, it's good for the primary moves and the general trend over time, but the intraday trading is actually not affected too much by it. Trap setups, short-term dislocations in flow, you know, imbalances, all these things that occur intraday, like, it doesn't matter that, you know, what's going to happen a week from now or a month from now. You're really zoomed in. Most of this, I forgot what it was that I was commenting on, but most of this stuff, like, if you're an intraday trader, you're probably taking in too much noise lately because of everything that's happening macro-wise. Now, maybe it helps you to be able to eliminate, you know, when things begin to change, to be able to get rid of your spot holdings and to be able to shed some longer-term positions. But as far as like intraday trading, there's not much that's going to influence your trading, right? Short-term opportunities will come from the FOMC. That's obviously a macro-related decision. It's significant for all markets, but a lot of this stuff that's happening in the news, unless it's the initial catalyst or event, taking too much information in right now is probably one of the worst things that people can do. I think I'm going to wrap it up though, guys. I am going to be doing another stream tomorrow night. This is going to be in conjunction with TradingView and Phemex. So I'll bring the heat tomorrow. Otherwise, today was kind of a dud. Meaning there's nothing really taking place. I have, in the case that something did, I have the charts up where we could trade directly off the charts, but all right, guys. Thanks for tuning in. Make sure you hit the like and subscribe button, or save your likes for the next stream when the dog doesn't set me off. And yeah, have a fantastic evening. I will be live again tomorrow. I think it's at 8 p.m., but I'll update and post on my Twitter today. All right.